Hello there, and welcome back to another episode of TA with MK. My name is MK. Now, in today's episode, we are going to do part 2 of my two-part series, my personal plan and strategy as it relates to accumulating Bitcoin over the next few months to year or years even potentially. Yesterday on part 1, we discussed the lowest that I thought Bitcoin could potentially go. And again, I'm not saying that it will go to these levels. This is just my own plan, just keeping an open mind to all possibilities. And yesterday we focused primarily on the golden pocket, and we were using the COVID crash, what the SPX, the S&P 500, the NASDAQ 100 or the NDX, and then what Bitcoin itself did during that crash. And what we discussed in yesterday's video is that the golden pocket, which is a 618 to 0.65, 65% retrace, if that was to happen like it did during the COVID crash, what level would that put Bitcoin at? And if you watched yesterday's video, or if you haven't, of course, you can go watch it. I'd actually recommend watching it before you watch this one. But the levels that we discussed were 10,500 to about 11,500. Now, I know that sounds a bit far-fetched and almost seems impossible, but I'm guessing if you got into Bitcoin around the 65K level, around the middle of November of last year, probably 26,000 that we just recently had probably seemed impossible to happen that fast, at least, right? So we have to remain open-minded, but I'm going to discuss with you in today's video, as we finish up this series, the time frames I'm looking for, potential prices, and how I will go about DCAing in to my Bitcoin position. If you guys are liking the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Okie dokie, I have two quick disclaimers I want to put out before I proceed with the video. And number one is, I wouldn't call it a disclaimer actually, just me being transparent, is that I have X amount of money, I'm not going to disclose the amount, but I have X amount of money that I would like to invest in Bitcoin over the course of these prices and these dates that we're going to talk about in today's video. But you have to work under the assumption, like I mentioned in yesterday's video, that you could lose it all. You never want to invest more than you can afford to lose, especially when you're investing in something as highly speculative as Bitcoin, right? Like, it has a history of only going up, but should it go to zero and I lose all the money I'm investing, I have to be able to live with that. I have to make sure that I haven't set myself up to not be able to live and pay my bills and eat and so on and so forth. So that's disclaimer or being transparent number one. And then number two is that this entire plan is based on Bitcoin not breaking back above $40,000. I'm going to put a video out in the near future if Bitcoin does go on a rally, or approaching those levels of what my plan B would be. This is all plan A, working under the assumption that we've hit our top. We're going into a bear market, and this is the levels and areas I'm targeting. But if we break 40K, and hold, on a significant candle like a weekly and especially like a monthly candle, then that's all out the window. In my eyes, that means that the bear market is over, and then I'll explain that in a future video. But those are my two disclaimers, so let's push forward. Now, I also want to mention before we dive into this that a huge part of my strategy will be involving timing more than prices, because I've looked at the Bitcoin halving, and we only have two obviously major cycles to look at. I kind of feel like the first cycle in Bitcoin was just too new of an asset to really track. Plus, we don't have a ton of data for that cycle. But you look at the previous two cycles, or this cycle compared to last cycle, there's a lot of things that line up to me that make me think, hey, the Bitcoin halving obviously plays a giant role in when the next bull run starts. Also, the timing of tops to tops and bottoms to bottoms all kind of line up roughly to me. And I'll explain that real quick. So from top to top, which is the cycle top of each cycle, the first one from 2013, which is this blow off top back here, to the one in 2017 was around 1,477 days. Followed by the 2017 one to the potential. Again, this is all potential because we don't know if this is for sure the top, but if it was about 1,428 days. So pretty similar time frame, right? For an average of about 1,452 days. From top to bottom, what I mean is once the top had the blow off, where would have been the best price to buy, or at least, the lowest price that held up. And same with 2017 to its, blow off top to its bottom. The average for that was roughly 381 days, right? This halving that I'm referring to, which is obviously when the Bitcoin halving cycle happens, we don't know when the next one is for sure, but it's estimated to happen at the end of March. But if you go off just these red lines that have vertical lines I put on here, which is the three halving cycles we have so far, This note says, how long did it take from the halving point to the break of the previous cycle's all-time high? What I mean by that is, so for example, this is the 2016 halving right here, right? That happened in late July, or early to mid-July. At what point after that was it able to break the previous all-time high, which for back here in 2013, that was, I guess I gotta get my notepad out of the way to see this, but it's basically a little over, $1,200 or $1,100. At what point did it break that? How many days did it take? Same with over here. You had the blow off top about 19,000, ish. And then the halving cycle happened on May 11th of 2020. So that was our last halving, right? How many days did it take before it broke above that and stayed above it, right? And at that point, that average was 255 days. The cycle bottoms to the halving, how long was that? So taking these yellow lines, this was the bottom price, how many days until the halving happened. They were also very similar times between both bull runs, an average of about 255 days. I'm sorry, this one down here, 532 days. The halvings to the cycle top. So, I'm not going to rush through this. I'm not going to keep showing you everything because at the end of the day, it's just a bunch of numbers. But I started to find a ton of similarities between some of these things, like when the halving happened, between the low prices and when the halving happened, and when the halving happened to the top, and so on and so forth. So down here, I put what was the top to bottom percent drop. This also is going to play a role in my DCA strategy. We mentioned this in yesterday's video and some other previous videos as well, but 2013 from its blow off top to its low was an 83% drop-ish, depending on the chart that you use. 2017 was an 84%-ish, so very close, so the average 83.5, and right now from where our top to the bottom, if it was to be the average of that, would roughly put us around the 11,500 area that we talked about yesterday, which is in confluence, of course, with the golden pocket, right? Retrace level. So now we're going to unveil kind of my target areas. Now, before I show that on this notepad, if you look over here on the right side of my chart, it shows that currently right now, the projected next halving for Bitcoin is March 31st of 2024. Now, there was a few different sites that had different dates, and so I don't know that we're going to know probably for another year or even, two, to where we can nail that down to a little tighter. And that'll, of course, affect these dates as time goes on. So I'll have to adjust my plan a bit as time goes on and that date changes, right? But in red, I've marked that as the next projected halving date. The greens are my how much time between when it broke from the halving to when it broke the previous cycle's all-time high, in both cases, and then went above it. Obviously, like in this last bull run that we just had, when it broke back above 19K, broke 20K essentially. That's what this green mark would represent, is my estimated time frame of when, it could break break the 65K in this case, or 67K, our top from last year in late November. And then these blue lines are just based off of the average that each top to top's taken so far. So top to top, top to top, and if this was our top, what would be the average, and I have two different things I came up with for that. So that's why this is kind of a range. One is that average exactly, and the other is how long the average was between both the halvings and the tops. So this halving to the blow-off top in 2017, from this halving that we just had in 2020 to this projected blow-off top in 2021, right? And so you put that there, and it gives you a pretty narrow range to work with that could be the next level's projected top. And it even lines up from a date perspective to a sense too, because you had the blow off top here in late December of 2013, right? So that was kind of like the end of the year. Then you had a late December again in 2017. You had late November, so still kind of the end of the year of 2021. And my projected dates put us between, October-ish and basically just, December 1st of 2025. Alrighty, and without further ado, here is my personal plan and strategy as it relates to accumulating Bitcoin over the next several months to years. Now, target levels. Now, just keep in mind that as I read this to you, I do have X amount that I plan on investing purely in Bitcoin, and then I have that exact same amount that's meant for altcoins during the next cycle or the next major altcoin season. However, if Bitcoin does hit my low projection, which is the apocalypse price I spoke about earlier, which is between 11 and 12K ish, right? then I have that altcoin. That'd be my emergency stash, and I would go all in with it into Bitcoin at that price. Now, so that's why this is going to make more sense once I read through this. So my low projection is 12K. Now, obviously, the golden pocket was down between 10,500 and 11,500, but ultimately between 12 and 14K would be my plan to front run that. And at the end of the day, 5-6 years after that, I wouldn't care if I bought the exact bottom. Of course, you're never going to buy the exact bottom, but that's where I would go 100% in my emergency stash, right at that level. Now, my next low prediction, which is I called it my mid low, would be around 16K, because that is roughly the 0.5 or 50% retrace level from the COVID low to this all-time high from last year in November, and I would front run that at 17K. That'd be 40% of the other 100%, which was meant entirely for Bitcoin, right? My mid high would be around 19K, which is the right around the previous all-time high from 2017, the below top right. We could imagine that that would at least hold up temporarily, or for a bit as support. Ultimately, if it fell, of course, that's why I'd have a backup plan for lower prices. But if we do at some point visit that level, I would front run it at the famous 20K, right, where there'll be a lot of buyers waiting, and that would be 20% of what I plan to invest. My high would be around 22,650, which is the 0.382 or 38.2% retrace, and I would front run that around 23K. So obviously, if we dip again and we're able to go lower than that 25-ish that we went previously a few weeks back, I'd be looking at something just over 23K to front run, and I put $20, but I bet $20. Yeah, I'll put a whole $20 in it. That'll change my life. Or could, I guess. But I'm at 20%. So anyway, now dates matter more to me. So keep that in mind, because my plan could alter depending on, if it hits stuff too soon. I'm more of a wait. I want to wait for certain dates and then, kind of see where the prices are at. But for now, we'll work under the assumption that those prices happen at all. It's going to be hard not to at least just go in at these percentages, the 40, 20, 20. But the reason that this doesn't add up to 100, it's 40, 20, 20 only adds up to 80, is my other 20% I'm leaving aside to just kind of see what happens over the next, few months. But my target dates, the bottom, December 1st, 2022 through February 1st, 2023. And that's just based off of the previous two cycles, the average between their high and their local bottom, right? So you average that out. It also kind of lines up with a few other things that are confluence for me, as far as like the the rate hikes will hopefully be done by then. I know that's when the end of the FOMC meetings are done. It's at the end of the year, I think, or maybe the beginning of next year, somewhere around there, and just some other things that line up as far as how long the cycles usually go, time before the halvings, and so on and so forth. So the halving would be my next dates I'd be looking for, which is estimated around March 31st of 2024. One of the reasons I brought that up is one thing I did notice that's kind of cool, is you wouldn't be getting the bottom, but if you just look at the halving right here, there was a little dip afterwards, but for the most part, it never came back to that price. It just went up, right? Kind of began the next crazy bull run. And the same thing happened, we had the COVID crash of 2020, but the halving happened after that, and basically that was a local bottom, and we haven't gone back to that price yet, and that would be back around like $7,000 or $8,000. So kind of cool. So that would represent another good opportunity to me to buy. You could just wait to the halving to actually happen and then say, hey, I'm going to invest a certain percentage at that point. And the other target date I'm looking for as far as a 2025 top would be between, like I discussed a bit ago, between October 1st and December 1st of 2025. And that was just based off if the cycles, the average top to top. And if we went from the 2021 top, that would put us basically between these blue lines over here on my chart, which is between October 1st and December 1st of 2025. Now, as we finish up this video, there was one last thing I wanted to mention, and it relates to kind of what I mentioned in yesterday's video and today, is the importance of having a plan and sticking to it. Now, obviously, on this notepad on my computer, I have the plan. I also have it written on a whiteboard in this room, and the reason why you want to write these things down is because often when you're making these plans, especially right now where Bitcoin's been boring, I'm making this plan with a level head. I don't really have any emotions involved. I've taken a lot of time to look up time frames and dates. You saw that crazy messy chart. Now, if I don't write it down, or it's somewhere where it could be easily erased or not saved, what could happen when these levels start getting hit is that your emotions get involved. Well, why is that? Well, for number one, obviously, if we're going down and down and down, that means there's more fear going on, inflation, maybe another war. There's just, there's factors or even maybe black swan events happening that are going to play with your emotions. But the key is, if you have it written down, you can ignore the fear and just say, hey, this was a plan I made and it was a goal of mine to stick to the plan. So keep that in mind. I will put out some more videos in the coming future as far as if we alter the plan at all. And what I mean by alters, again, like if the 40K gets broken, that will change my plan. The dates matter to me a ton, so if Bitcoin drops all of a sudden 50% tomorrow, which isn't going to happen obviously, but if it did, it's not like that would necessarily mean to me that that's the best price ever to buy, because we would still have potential for more downside in my opinion. So at the time being, this is my plan. I've written it down and I plan to stick to it outside of just those few things that I mentioned. Now, if you guys are liking the content, please remember to like and subscribe. Also, leave me some comments in the comment section of what your plan is if you have one, levels that you're eyeing. I'd like to kind of compare, you know, bounce some ideas off each other if possible. So, hope you guys have a good rest of your day, and thank you for watching. It's